Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 292 for March 8th, 2021. We are recording this at 1 p.m. Eastern. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we're going to be talking about the S&P 500 and everything else we're watching for this week. So I've arranged for Michael Filighera to join us again. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. Good to have everybody with us today. A lot of excitement. They passed the $1.9 trillion bill. So that got all the buyers going nutty here this morning in some of the areas, particularly value. But we'll get into all the numbers on not only stocks, but in some commodities. And before we get started, Michael, give a little background on yourself and what's going on at Logical Signals.
Thanks, Jim. I am Michael Filighera. I am with LogicalSignals.com. And what we're doing is just continuing to follow the markets. We're building the website out where I'm now posting a daily podcast, so with a video so we can see the charts, and I'm updating Elliott wave counts for the NASDAQ 100 or the NQ primarily there. And looking to just continue to do that for a little while and then possibly begin a trade room again. But more on that later.
You bet. All right, well, let's get into these markets right now because, again, we have a very large rally today. But again, where does that put it in perspective? Because we had recent highs of 39.15, recent high of 39.40, recent high of 39.60, and we are still trading under those levels. Yep. Albeit we're pressing the 3,800 area today on the high, I guess. So what are you thinking here as far as what is the Elliott wave and what is the Fibonacci's telling us right now?
Okay. First of all, can everybody see my screen? Can you see my screen, Jim?
I can see it perfect, yeah.
Great.
Yeah, it looks good.
Okay, perfect. It's not been an easy count Elliott-wise coming off of that all-time high at 39.59. And thus far, I mean, last time that you and I discussed it, Jim, we were here. Mm-hmm. And we were really looking, I think, at a rally that was starting, and we had discussed the probabilities that the market could go and create new highs, run itself up to about 4,000, and then begin a larger corrective phase. That still actually remains in the picture, but what is going against it at the moment, as the declines tend to be 5-wave structures, and the bounces off of it are ending up being 3-wave structures. That continues to signal downside. I mean, even here, as we got down to 37.20 last week, it has bounced off again by that strong buying that we saw on Friday. And granted that a lot of that probably is due to the fact that the COVID-19 rescue package has been passed and should be now implemented or signed into law, and that'll be a really good thing for not only the fight against COVID, but for the country and for a lot of people that are really in need right now. But also connected with that is the beginning of the month. We usually run into a period. It's usually that first Friday, and then we get the carryover on the following Monday of 401k and IRA money that's got being put back into the market. So I think that has a big part of what's going on. Mm-hmm. But again, we're buffeting up against resistance here at the 0.618, and that's going to be of that decline. Mm-hmm. So if I'm looking for the rally, which we were, these are the points where it should come to. The first one was, of course, 50%, and it kind of hovered around, went up, went back down, and now it's come back up through it. And then that pushes it to the next level, which is 62% approximately. And now it's kind of waffled around there a little bit, and now it's breaking up. It hasn't really broken it sufficiently enough to really call that it's likely going to get up to this 3890 area, possibly even 3900 on some throwover. I'm kind of looking down, and we're looking at a stochastic momentum. Momentum continues to point higher, but you can see it's slowed down quite a bit, and it's now pushed itself into also overbought. Not as extreme as it's been on a Friday when we got that massive push up in the afternoon. Now, if that begins now, then I would anticipate that this indicator will just get severely overbought and likely get up to that 3888 to 3890 or 3900 area.
Mhm.
Now, to answer the question that got put out in the survey this week, I actually am going to call it lower, because I think that we are in a finishing move, and that the market will likely move lower and then by Friday end up below today's open.
Yeah, this is a market of stocks, and in our newsletter, Option Professor newsletter each week, we've been as clear as a bell since last September that the interest rates would be rising because of economic strength, and that there'd be an exodus out of the high PE stocks like the QQQ and the other ones like that, and there'd be a big rotation into value. That is exactly what's going on today, as value continues to scream to the upside, and they're dumping Alphabet, and they're dumping Apple, and they're dumping all the other ones that are more linked to interest rates.
Absolutely.
Now, the thing is how far can the S&P go when growth and tech is like 2/3 of the index, and growth and tech is having a difficult time holding water? And that's why, unless we can take out the 3915, 3940, and 3960, I think that you still have to keep some respect on the concept that that the market could unwind, because again, a day like today, everyone is rushing into certain things, and the people on the other side of the trade are going to raise their offer as high as possible to take in all this buy volume. And then what's going to happen on turnaround Tuesday or turnaround Thursday this week is going to be very interesting.
Right.
You know, so anyway, I think the drop we sort of 3,700 was clearly in the cards on what we were talking about last time we were here, and now we are having this vicious rally to the upside, particularly in value, obviously not in the tech, and but there are some guys out there like Tepper, who has come out and said he thinks that the 1.6 on the 10-year, it's going to stall in this neighborhood. If it stalls in this neighborhood, then the banks are going to give some of these gains back. The oil just had a bombing in Saudi Arabia, and the oil prices are actually down today, I believe.
Yes, they are a little bit.
And so energy and banks, which have had a zooming run, it's not inconceivable that they could start giving it back. And if they start giving it back, then obviously, the value trade itself also could back off. So these next 90 days, it might be a time where the markets, don't appreciate that tremendously, and then set up for a better rally in the second half of the year.
Right.
Yeah, that's possible as well.
I agree with what you're saying, but I find it very interesting that the bonds continue to now slide lower. So we're seeing that hit the NASDAQ, while the Dow, like you said, really pushes itself higher. I don't think that that's going to balance out. And I think that what the balance will be is they'll both end up going down. The broader market and the NASDAQ will both get caught up. And then a lot of it is going to be what you're saying, based around the interest rate.
Yeah.
And so I think that we need to pay closer attention to that. And then,
$1,400 is, is not a nothing money, but most people who have a mortgage and insurance and taxes and utilities and other things going on, $1,400 goes pretty fast. So it's not like $1,400 every week. It's a $1,400 one-time hit. And, the unemployment, at $300 more a week, again, people have overhead. So it's not like, they have no use for the money at all. In other words, it's a transfer payment, which is different than like infrastructure, which would create jobs for maybe months and months on end as these projects have to be completed,
Yes. Yes,
And some of these in the 1.9, that's over many years they're handing it out. It's not all at one time.
I agree.
So it'll be interesting to see. But as far as, getting overly excited with the move today, you can see that tech still has its trouble. And you can see that the value might be getting ahead of its skis a little bit because, a value was a heck of a deal back in September of last year when we talked about it. But it's not quite the deal it was because, Citigroup was at 40 and now it's at 70, 75. Now 70 or 75 on Citigroup is not quite the deal it was at 40.
Right.
And
yeah, and I think it's just going to be a tricky play because again, if you're just really a swing trader or a long-term trader, you might be able to sit all this out. But if it starts to tumble due to interest rates, due to just other factors that are going to come in and join that gang up on the markets, then I don't know how long you're going to want to sit all of this or sit with a long position. So again, it gets back to what we were talking about. Coupled with all of that today, gold is taking it on the chin again and is now dropped below 1,700. And
I wanted to ask you that real quick because I did a measurement and tell me if there's any water to this idea. I measured for the low from where this whole thing started, which was 1,040. If you can put up a gold graph, we can do a little bit of. All right. And so I did a little measurement of 1,040 to 2063. And I got $1,000.23. That
is probably going to be, you said 1,040, so that's all the way down here.
Yeah, well, that's where we started it. That's where the start of the bottom was right there. So that's where I got it anyway.
Let me go up one more because I think it might be, let me go out here to my monthly chart.
Yeah.
Gold, okay. 681. So you're talking about this low, right? Okay. Yeah.
Okay. So I'm talking about from that low there. You got a 135. I had it at 1040. Rounding numbers. You know what I mean? Yeah. So you got 1040 ballpark, and then you got 2063, and that gives me $1,023. If I take 38.2%, I get 390. And if I take 2063 minus 390, I get 1673, 1675, which is about the lows. Is it possible that this is the 38% correction?
It is actually. You can see it right there.
Yeah. And is it possible that correction may stop here? And if it doesn't stop here and if you went to 68%, 62%, you'd be down in the 1400s. So it very well better hold this area.
Yes, you would. Yes, I agree. I agree with you.
You would say this neighborhood here is a fairly important neighborhood, maybe, huh?
Yes.
Yeah.
If you're a gold trader, absolutely.
Yeah.
But wait, because this is the monthly chart, and I'm going to pull this all the way back down and take a look at that hourly. Now, on that hourly chart, it's coming down. It's 1671.50. So it's really within the hood right now. It got down pretty low. Yeah. But now I want to see, before I'm going to start jumping in hand over fist, I want to see a 5-wave structure up.
Okay.
But I agree. We have now come into 382. If they're not settled with this yet, then they're going to push it much higher.
And I got a divergence down here too on RSI, meaning we've made a lower low on RSI on the market here, but I didn't see a new low on RSI, and that's a very powerful thing to me because that's indicating exhaustion and a bunch of baloney selling.
Okay.
Do you see that at all on your RSI? A little divergence between the lows that we did have and then the lows of that we're getting today?
Let me back out to that monthly and see what I got, because I don't have it on that hourly. No, but then mine's a stochastic momentum.
Okay.
So
I was using a 14-day.
Yeah, but mine this is on a really long one.
Then the other thing, okay, one other thing I was looking at that I wanted to compare is the gold mining GDX. I thought that 30 area was about as far down as that should go if in fact this is a correction, because those were the former high points of where we broke out on GDX.
Right.
And the gold shares, they kind of told you 2063 was kind of a baloney move because they went nowhere near their 2012 highs, the gold shares.
It's
But
GDX or GLD.
no, GDX, that's the Vectors Gold Miners.
Right.
Now, can you see where I was seeing that the highs come in at around 30 there? And so that should be about as low as it gets if it's any good.
Yeah. Yeah. And again, this is again the monthly, and
Yeah.
it's kind of bounced or dropped below the 200-day moving average, but it's flat. That 200-day is flat, which is actually saying that it's not really going to go very far either way. So it is, yeah, I would say that it should coincide with gold, but as we know, it doesn't always have to.
No, but I think if it doesn't coincide with gold, it's telling you something. In other words, this failure for the mining shares, and I brought this to people's attention, this mining share, I mean, it clearly had a big run. It went from 13 to 42, but that thing used to be at 65 last time we were at those high levels. And so the fact that it was nowhere near the all-time, the high of the 2012 rally was telling me that the mining shares, albeit we're going up, but we're not really confirming this 2063 number.
Right.
And I viewed that as a warning sign. That and the fact that, at 2063, we're 4 miles away from the moving averages.
We are 4 miles away from, yeah, we are.
Yeah. Well, we were at that point for sure,
Yeah. But now that it's come down.
Well, this is more interesting down here now, obviously.
I agree. And I might, this is the hourly pattern. So that's that low. You see how they're just threes? They're just threes, which kind of tells me it wants to go down one more time. Now, if it might just go down and equal this low, maybe get slightly below it, but I think it should hold and turn the market higher.
Like I say, the high points of 19 and early 20 come in, and it's messy, but I'm just using a ballpark figure of about $30. I'm not trying to squeeze the eagle until it screams. If I'm in the neighborhood of where I think is going on, I always feel better. So, that ballpark 30 area seems to me to be an area where it should stop. I mean, if things starts trading 25, I think the ball game's over.
If it trades 25, you should have been out.
Well, not only you should be out, but it's telling you the gold going to 3,000 and all those, numbers is off the table.
Yes.
Because then you're going beyond correction into bear market,
But I think what we have going on is we've got too much of that people just get associated. Gold has, higher interest rates, gold doesn't like it, boom, we got to sell gold. And I think once that settles out, and then gold will come back to dealing with why it's being pushed lower. And if it can adjust to the interest rates, then it goes back to being that storehouse of value, and people will come back into it if the market's then continuing to slide lower because of uncertainty.
Yeah.
So those are the two opposing forces that are going to push gold around. But as we have seen in the past, it gets to a point where traders in gold go, that's enough, and they just move in regardless of what others are thinking that, well, we got to go lower because they're just saying.
The other thing is, option professor's viewpoint has been that the 88.90 area on the dollar index was going to be the low, and we were going to bounce maybe as high as 95, particularly if we got above 92, which we just got above 92. So the dollar trade was similar to where the bond trade is now, meaning the whole world was short the dollar. And that's not a good place to be. That's a little lopsided. So obviously it was people could not understand why the dollar would rally. But when our rates go higher, then we get the yield advantage back in the picture.
Absolutely.
And with the yield advantage, that's what I mean. When we took away the yield advantage, that's what caused the dollar to drop.
Right.
Remember we went down to 0.5% on the 10-year, right?
Where do you think the dollar index? I have it up now. Where did you think it could get back to?
Well, I thought it could get back towards 95. I mean, on a best case scenario and still be in a bear market.
You're spot on.
Yeah.
But
92 was a kind of a big number to kind of exceed, and we have done that.
Right. And I think that eventually it's going to go up and at least test this 200-day moving average. And that's on a daily chart
But this is definitely clearing out a lot of the dollar bears. I mean, let's not kid
certainly
ourselves.
is, isn't it?
Yeah.
But you see that working on a 5-wave structure, and all I is 1, 2, and a 3. So if it's going to come back and do a little 4, it will go back up to finish on a 5th wave, and that I think will get it up to that 200. So you're looking at 93, which I think is pretty spot on, calling a 95 top. So
now, what about TLT? Because TLT is obviously the proxy for the 20-year bond. It seems to me if it can hold this 135 number, I mean, it could be near a low point too.
they are getting near a low point. You can tell in the daily that
And that's a divergence a little bit with your stuff, isn't it?
Yeah, it is.
Yeah,
But I think that you're probably more spot on that, yeah, I think you're more spot on with that 135 number.
Yeah, I think if it takes that out, and then I think, we're going to go to 2% on the 10-year, and it's going to get real messy.
It's going to get very ugly.
Yeah.
See, this thing bottomed at 36, and it looks like it probably still needs another bottom. This is the weekly.
Yeah.
It's kind of flat on momentum, but still angling slightly lower. So I think 135 is not a bad call, but I think it's going to happen fast. We just go one day where they boom, they sell bonds, which could coincide with the dollar. There's a lot of stuff going in together there. That
I mean, there's a lot of powerful stuff going out there. This unemployment rate is going to collapse by the end of the year because you got the entire service sector that has been sitting there doing nothing, and those people are going to be mobilized, and that's going to have a dramatic effect on the unemployment rate. Now, that's also going to possibly throw in that inflationary pressure and all that kind of stuff, because people are going to be mobilized. Now, how fast they're going to be mobilizing, that's going to be the big issue, because everyone is actually starting to discount the idea that it's going to be like the World War II ended and everyone's going to go nuts.
Right.
I don't know that that's going to work out 100% like that. I think sometimes people overestimate it, but it could go that way. And if it does that, these bonds clearly, I mean, if there's a bubble in the world, it's in the bond market.
If there's a bubble in the world, it's in the bond market.
I mean, they got junk bonds out there going for no interest. You got sovereign debt going for negative, although that negative interest is shrinking. It was 18 trillion. It's down to 12 trillion now.
Wow. Okay.
Because when rates are popping in Europe a little bit and popping a little bit in Asia or whatever, it reduces the amount of negative yielding debt.
Which is, and that I just think there's a lot going on, and we're in that in between moment of coming from where we were to getting to where we got to be. And so there's a lot of things to digest. But what I have found with trading and the algorithms and everything else that we have to participate with is they just jump. And it's like when we see that, it doesn't necessarily mean a large change. I just think a lot of times they're early and they just come in and move the money now, and then they're going to sit out whatever comes later, or maybe they'll add more. I don't know, but I find that it can be very deceptive. For example, there's a lot of people that are going to go back and they're going to look at the Dow was up 500 on Friday. The Dow's up 630 today. Geez, that's 1,100 points. We're bullish. And it's like, don't jump in front of a moving train.
Right. Well, let's talk about a couple of other commodities that some people are thinking might be turning around. Sure. Some people are thinking that the copper trade is a short up here. Let's put copper prices up there because they've gone through the roof.
Tell me, I'm HMG. I can't remember that.
Well, I don't know. Can you? I don't know what it is on your system. HG maybe.
HGT. Nope. How about just HG? There we go.
I mean, there's some people thinking we're not going to get much above 420. Where are we now? Like 408, 410?
410, but we've been as high as 437. Again, that's on a weekly. Let me bring this down to a daily. I'll tell you what, in the Bay Area, this is just producing. Yeah, I would not say 415 is going to cap this. and it's just an intervening small rally, and it's got another leg down to do.
Yeah.
And right off the cuff, I would say that we got $3.80, 79.80 in there in the picture.
So this doesn't look like a bad sell up here then.
No, but I think it's just a near-term sell.
Yeah.
I would wait for the stronger signal that we're going down, and that would be a solid break of this a 50-day moving average.
What about selling the soybeans? They are rallying tremendously as well. Something like the May beans or July beans,
Right.
something like
I
that.
might
Yeah,
do this. It tells me that I got to.
yeah, because they've gone from $8 a bushel this year all the way up to almost $14.50, almost $15. And of course,
Yeah.
there is some weather issues in Brazil that has caused some consternation. But you know, this thing is way away from its averages, which is down in the $10 area. Is there any?
I'm trying to. They've changed these symbols on me, and I'm not sure what the symbol is for soybeans on my chart anymore. That's Elkhorn. So I can't put it up. I'm sorry to say.
There's a ETF that's, I think, just SOYB.
Yeah, put up that. See what that looks like.
Soybeans. I want to see. Yeah, that's it. Wow. Seasonally, they start to rally, but I think a lot of it's going to be it's on what, because now a lot of the soybeans are coming up from Brazil.
Right. No, they had a little weather. They had a weather thing down there, so that obviously gave it some legs. But like on the actual futures, this July bean went up towards 450.
What symbol do you use, Jim, for that?
They're looking at a ZSN 21. ZSN. I don't know what that means on your situation.
All right,
there it is right there.
Right, ZSN. All right, how about just ZS?
I see it coming up when you put it up.
There we are. We got it. They start putting a Z in front of it. Before it was just S. Now it's ZS. It's had a really sweet rally, but you see, after it dropped here, this to me is finishing. It's not necessarily bullish, even though it's gone to an additional high above what it did in the beginning of the year. I think there's a lot of seasonality. I think a lot is going to come up with how quickly they're able to plant here in the US and what happens after that. We've seen where we get a lot of, there'll be flooding along the Mississippi Delta, like not the Delta, but along the river. And it floods out a lot of that, what they planted for this year. So, I mean, these are, like, you know, and I'm sure you've said, Jim, commodities, particularly this one, and like soybeans, wheat, and corn, they really do have seasonality, and they do have what weather problems that come in, because it's a real thing, and it depends on what gets planted and what they're able to get out of the ground in terms of a harvest. But right now, it's been a tremendous rally. It's been a tremendous rally.
Yeah.
Last year.
Yeah. Another market that's rolled over, and I don't know how many people actually trade it, is Palladium. And Palladium symbol is, what is Palladium symbol? PAM? PAM, PAM?
Palladium, not platinum.
Well, platinum's doing, we'll look at that in a second too. PAM though was the Palladium?
Yep, it is. No, it isn't.
It was just right there. Yeah.
I know, but it didn't take it. Oh, damn.
Yeah, it came up and then it went away.
Oh. Platinum, PL. That's platinum. PA. Palladium. Just PA. There we go. Wow. Wow. It roared higher to catch up with everybody, and now it's just kind of hanging out there. And it's dropped back in January. It dropped below that 200, recaptured it, and it hasn't looked back. But look at the congestion with all of the moving averages right there. The 50 now going flat. The 200's going flat, and that might just range between the two.
It was a good sell up there at the 25,000 area, or 2,500 area.
Well, it absolutely was, yeah.
Now the platinum seems to be doing well against the gold because gold's been going down today, and the platinum was up 20 at one point. Let's see what it's doing now. But yeah. So, you know, there seems to be some interest here, maybe because of the discount to gold, maybe because it's much rarer than gold, and the catalytic converter demand could pick up if the auto industry starts opening up their factories full steam.
Right. I think what you'll need to look for here, now this is all technical because you've filled in some fundamentals, but on a technical basis, we're looking, it's getting stuck at the daily 8-day moving average, and it could get itself up to the 20, which is sitting at 1188. And I would tend to think that that might stop it for right now. So those are the points that it needs to break solidly above to prove that it intends that this rally is going to carry it up back towards 1200, 1232. It could definitely happen because it certainly is oversold down here, and we run a strong possibility of it just popping up and getting it back up there in a recovery type of a rally, and maybe put in an additional decline.
Now, is crude oil rolling over here? I mean, they bombed the Saudi thing. They got the thing up to like $67. Now it's at 64. I mean, you know, is this a sell the fact type thing? Because, and you know, my feeling on that OPEC thing is why would they increase production in March when COVID's not over and it's not the summer driving season? The big risk is as we get into May and June, these guys are, if they can squeeze the prices any higher, that's when they unload on supply, because then they know everyone's going to be out there driving, and why not supply at high prices rather than supply in March when we're still in the house?
Look at this decline though. This is the hourly chart.
Yeah.
So right now it has 1, 2, 3, 4, 5 bars down.
Yeah.
That's from this cross, which really is a doji on that. Crude has had quite the run, and I think that might be it.
Yeah, it looks like a little bit of a short-term blow off top, maybe, huh?
Yeah, absolutely. Let's go back out to the daily.
Which could have an effect on it could have effect on the energy shares because of the fact the energy shares have also gone up quite a bit.
On a lot of hope women of prayer.
Yeah. Well, they're coming out of the basement. I mean, minus 37 a barrel back in March, and $5 and $10 for things like Halliburton and Occidental and Petroleum certainly is a capitulation to the downside. So
right, and I think we're going to see a lot of. If I'm a long-term trader, I'm definitely staying away from energy, or at least oil, because I think that's where we're going to see a lot of switches. We're going to see a lot of movement around, and I think the rally in oil was basically because a lot of the larger producers have started to hold back because they want the higher prices, and then today, just kind of, I really would not have anticipated if there was a major explosion. And again, there was the other one in Iraq that they're blaming on Russia, that they went in and they actually got and hit a bunch of tankers and caused that large fire. They were Saudi, but it got caught, and it was in Syria where the bombing actually happened. So I don't know if they're, that's just distribution, and if they can't get it, maybe that's why it's coming off a little bit here. But I mean, there's definitely room for it to rally, but I would not think it's going to get to $70. It may try, but I would think that would cap it.
Now, what about in this financial sector? Because again, the two things that have gone nuts lately are banks and energy. Yes. And so XLF is the spider on the financials, and they're breaking out, but are they getting a little bit blow-offy looking? I don't know.
Yes, very, very much so. Again, this is a weekly chart. Look at this weekly chart is reaching it. It's cresting momentum-wise. As we come up and we hit this, we see that this is now putting in new yearly I mean, this is new yearly highs. I'm not sure. Let me put it out one more. I'm going to say that it's likely just new highs, period. Yeah. For as far as I can tell on my charts, there's new highs for this ETF.
For this run, yep, for this run.
And what we've got going here is 1, 2, 1, 2, 3, 4, 5. I would think that this is the third. It's going to pull back a little bit. It's still got more. How much more we could run, Fibonacci, but I'd need to see it come down first. And then, but I would say that 36.50 will likely cap it. And that puts it, high enough above, because I think that's also a bubble waiting to burst.
Mm-hmm.
And I just don't see the Federal Reserve. I know that they may be forced to try to stabilize things with interest rates, but it would truly go against everything that they're trying to do. So they just want to stabilize the dollar. They just want to stabilize interest rates so that the whole recovery really takes hold, because you got that sitting out there, right?
Right.
Like, they start pumping up interest rates because they need to control inflation. Well, that's going to kill any recovery. But so will inflation. So you get between a rock and a hard place here. So
what are we thinking about Apple? I mean, a lot of people like to trade Apple. It's back down to that 117 number. I mean, this is a neighborhood where it has supported. What's the idea here? Is it going to go down towards 108, or is it a situation where it's going to hold up here? What do you think?
On my monthly, you can see it's just a small little blip, but I got 107. So I think it definitely could drop. Let me come down to my daily and see if I can get both. Yeah, this is the zone that's going to give it the support. And you can see the bottom of that zone is 103. And I'm kind of looking like maybe 107-ish, like here, 107.50, which is going to bring it like within that bar. But bottom side, it's 103. And that, I mean, even on a daily basis, it looks like it might be pulling into a fairly stable low and hold itself above 117, rally back to like 125, and then go again.
Now, here's an idea. Our U.S. banks have gone a little nuts on the upside, and some people are looking at EUFN, Edward, Uncle, Frank, and Nancy, which is the European financials, which, I'm wondering if there's anything going on there that might make any sense. This would be all those banks in Europe and financial things in Europe that, that haven't really done that much. They're obviously rallying here a little bit, but they haven't made the move that ours have.
Right. I am not familiar with this ETF, but we can see that it's heading for the highs at 52. In fact, it's touched it today, wants to pop above it. Let me pull this open a little bit more. Let's take a look at a weekly. Yeah, the weekly's got a ton and a half of room, but I think it's going to get stuck at those March highs from last year. And that'll be the big test. So 1980 will be a big test on this thing. And then we'll see from there. But it's pretty extended.
One other stock that I've noticed seems to have been trying to bottom. It pays a heck of a dividend, is Telephone T. It's up above 30 today. It seemed to have bottomed out 27 or 28. Obviously this has been kind of a doggy type thing, but you get well paid for holding on to it. And with 5G ahead of us and this and that, I mean, is this the time to be loading up on this thing and collecting that dividend?
Last time we talked about that, we thought that it was going to come down at least to 26.
Yeah.
If not come down and below that low at 26, it did not. And so it went up and then back down it went up in 3, came down in 5. And now it looks like it might be going up in 3 again. So I would say, yeah, but I think the upside is going to be limited to the 200-day moving average at 32, 33.
Maybe it's a level of debt or something, because they got
Might
good commercials with that one ad that you see all the time. Two commodities that have been doing very well overall in the last year, but some people think they have a very big future in 2021 is sugar and coffee. Can you put up the sugar graph and see, because that thing, we became very constructive around $12, 12.5, and it went above 16, went up towards 17. Now it's pulled back. But is there a future to this thing?
it used to be sugar was SB. Now it's something else.
SU maybe?
SU?
I can tell you what no, it's SBK and SBN and those kind of things.
SB.
SB. Like
No,
Sam.
BB. Oh, S.
S, Sam, sugar. SB.
Yeah, sorry.
There it is, number 11.
And it says it can't find it. So you notice how it does that?
Yeah, because it seems like if you moved your cursor down and clicked on it when it comes
Is it
up.
still March or has it moved out to July?
Well, you can do May or July. That's a K or N.
Let's
Yeah,
go
there you go. Yeah.
And it won't do it. I don't know if it's like they dropped me from picking up
Different commodities.
yeah, this one, because I couldn't get coffee either.
Well, you can put cane up, CANE. That's the ETF on it.
There you go. I used to trade sugar years ago. And it's done a nice rally, but now you can see it's starting to turn lower. And this is the weekly, and the weekly is dropping here as well. So I would say that sugar is going to come back in.
Yeah, it may have legs later in the year, but it looks like consolidation's on order now.
Yeah. Yeah.
What about the coffee? Can you get that? Or if not, maybe you can look at the ETF on it.
Coffee used to be KC, didn't it?
Yeah.
KC, Kansas City, coffee futures. Let's see if I can get them. And now I can't. No, they cut me off from that for some reason.
Yeah.
What was the ETF?
I'm trying to remember that.
JO.
JO, that's right. Yep, JO. Thanks, David.
Coffee ETN. It had that beautiful rally. Then look what it did last week. Wow, boom. They're trying to just rally back, which would be expected, but it's not getting very far.
No.
So I think that it's going to continue to decline. We've got the 20-day moving average there and the 50-day moving average there. So it looks like, if anything, it's going to range between the 200-day on the top and the 50-day on the bottom until they all catch up and do what they need to do.
What about on the silver? A lot of people like to look at the silver. Seems to me 22.24 is the range it's got to hold. It's up today, turning around and back down a little bit, but
turning around, coming back down. Now it is more in line with following gold lower.
Right.
This, I think last time you and I talked about that, we talked about that it seemed like that Wall Street bets was coming in.
Yeah.
And they were trying to force the silver short squeeze.
Right.
They had some success. But just like they have tried to do in gold, it's like, don't play against these traders that have been doing this for 50 years,
Right.
They will win in the end. And that seems to be the ticket. Again, seasonality, interest rates, everything stacks against holding, particularly silver. Now, producers may step in and decide to get this because they actually have reason to do it. But if I was just going to be a straight silver, I would definitely not be looking to buy next until I was seeing it to come down towards that 50-day moving average at 23.40. Because you really run a risk that it could come down at least here and retest these lows around 22 before it decides it's going to do anything. And this was not, even though it went up to that high, it's not bullish in my mind. Look at the wicks on these bars. Look at the intensity of the selling. versus the buy. I don't think that's a bullish move. So I would be looking for lower prices near to midterm. Of course, it's going to have, intraday rallies and things of that nature. But I think on a longer term play, no, I wouldn't take it right now. If I was a long-term holder and I'm looking to pick up silver coins, yeah, that I would do. Just like I think it's okay to buy gold coins, because the cheaper they get, the better it is to buy them and stick them in the safety deposit box.
Right. Let's look at one gold share, a Yamana. It's been hanging around this $4 neighborhood.
What's the symbol?
And that's AUY. And again, it went nowhere near where it was in 2012 if you scaled back into a more of a long-term graph.
Wow, yeah.
You see? And so the bottom line is this a pullback that will hold?
No.
And now doesn't look like it? Too much red bars there, huh?
Well, also look at the pattern. Here we had this beautiful rally, and it was 5. Then it pulled off in 3, rallied back up in a very sloppy 5, pulled off in 5, rallied in 3, came down, and now it's rallying in 3 again. And that's on a monthly. So this is a long-term chart that's telling you, Now, whatever caused them to cough it up here, these are months. That was a down month. That was a down month. So it's just coming off of 2 down months. So a rally back to 454, 455, sure. But I think there's additional downside. And it's likely to come down towards 365 for a start. And then you would take another look at it. So no, I don't, Unless, of course, the whole thing turns around. Now, again, I don't know what their cost per ounce is to get gold out of the ground.
Right.
So if they have a very low cost, then gold can continue to drop and they'll be fine. But if their cost is, 1,700, they're going to slow down.
Let's look at a couple of momentum and volume movers and see what they look technically. One is Pola, P-O-L-A.
P-O-L-A. Power. That's a power company?
I guess a Polar Power, but
Polar Power.
it's had significant volume and momentum, as you can see.
Doesn't make money. Interesting.
But the technicals look like there's quite a bit of red up there now, huh?
Yes. Again, this is monthly. Let me bring it down a little bit.
But yeah, bring it down to a more of a shorter term thing. Yeah.
There's weekly. So, but it's had 1, 2, 3 quarters of no revenue. We've not been making money. So, is this a new power company?
I don't know exactly. I'm just finding it from volume and momentum here. Another one is MGIC, which I think is a mortgage insurance company.
Oh boy. I don't know if I want to hold them. Yeah. Magic Software? No, this MGIC is Magic Software.
Yeah, it's Magic Software, but I think I think it has something to do with mortgages or something like that.
Gotcha. Okay. Well, on a weekly basis, momentum seems to be, as far downside, seems to have waned and maybe bottoming. It hasn't turned higher yet. Let me drop back down to a daily. Let's take a peek what it's doing, because it's not starting the week well. It's starting the week with downside, but it gapped this morning. Look at that gap. Wow.
Yeah.
So, number one, as a technical trader, many times the market want to come down and fill the gap before it decides that it's going to take a rally. If it holds this 50-day moving average on a daily basis and then get itself back above that 20, I would say that you are getting very lined up to where it's going to be green light for new highs.
There's
I've
one
been
there.
looking for-
Yeah. Looking
I'd
for a
be
little
looking-
movement on the upside if it can get moving a little bit higher, huh?
Yes. I mean, get itself back above the 20, and because then the 8-day will follow, and some people use the 10-day. It will follow, and then when we get 200, the 50's above the 200, the 20's above the 50, and we get the 8. The 4 doesn't really play too much on a daily level, but that 8 or 10-day, get that above the 20, which I think it won't take much to do that. That's green light. That's a green light for upwards.
Here's a cheap one that's got a lot of volume and momentum, ANCN. Let's see how that's looking technically. ANCN.
Angiotherapeutics. Giano, whatever, however we want to say that. It's kind of gappy, isn't it?
Uh-huh. It's cheap too.
Cheap, yeah. But that's why you get an institution. Look at that. It's still a green bar, but look at that topping tail. And what did it do? It came right back and just worked its way higher.
Yeah. With the therapeutics, it's a sector that obviously, can be very volatile.
Yes, because then we've got this huge on the 10th of February. Look at that huge bullish bar. And then they just spent the next several days, or at least a week and a half or so, kicking the poop out of it and bringing it all the way back down. Gaps again this morning. And can't hold it. That's interesting.
It's an interesting one. Switching gears to a company that I heard the CEO on Kramer one day, and he was going on and on about all the stuff that they're going to be doing. And now the stock has had a very significant drop. NVDA. Seems to me like they're, got everything going for 5G and gaming and logistical stuff with regards to warehousing, data center, of course. I mean, is this a gift that will start giving, or is this something that's revaluating with higher interest and they're just not going to pay that much for a dollar of earnings?
I think that's exactly hitting the nail on the head.
Yeah.
NVIDIA tends to rally when they're really deciding to push the NASDAQ because it's a bigger stock and they get more push for their buck. But then the reality will come back in. Like those earnings were not bad.
No, I mean, they made, I think, $5 billion in the quarter, something like that.
Yeah, I mean, they're definitely in play. But I think as we've seen in so many times, it's the valuation gets far ahead of reality because they're just going to get long and they're just pushing a button to just get long. And then the reality sets in and then they make their adjustments to the prices. So again, if you're going to go out and trade this stock because of the price being so high, then I think you have to do, as you advise people to do, you need to put options underneath it. So you want protection in all directions on this puppy. If you're going to be long, you need those short calls.
Now here's another one that obviously I'm looking at companies that obviously are hugely profitable and have huge footprints. Obviously, NVIDIA's right at the top of the list. The next one is BABA, BABA. I mean, this darn thing's down to 228, and where can we stick a fork in it
to say it's done?
Well, not say it's done. How about pitch a tent, where we're going to start establishing a position?
200.
Yeah, you think it has destined for something like that? Because, at some point, these guys, they do have quite the business going.
They do, but how much of it gets caught up in politics?
Yeah, well, obviously a lot currently, but, the winds of change tend to blow sometimes, right?
Yeah, there you go.
Yeah.
But so again, it just depends on why you're going to move in. If you're moving in and you're deciding you're going to position yourself in this particular stock because you believe in their growth, and their growth estimates and what could really come into play here, then yes, you're going to be looking back here. You're going to be looking at those rallies. But if here again, protect yourself. I
Yeah.
cannot disagree with the analysis because Alibaba is definitely solid.
Yeah.
And this is the holding company for the whole thing. But I mean, they do make a ton of money. And when they have their, their like prime days, or I don't know what they call it, the equivalent on their
It's
system,
huge. Right.
they pull in $3 to $5 billion on just by doing that in one day. So it's like, yeah, their potential is there. Again, not bad earnings. But yeah, I would kind of look for, it just really appears to me that it's going to go below or down to like 200. So definitely below this low that we had back at the end of last year.
Now, a lot of people are saying, obviously, that the value is a good place to hide out in this environment. And they're also saying emerging markets. So how about EEM? It's on the defensive today, but is there a place where EEM would make some sense? The idea is that the valuations in the EM is much lower than ours, and in Europe they're much lower. So that's why they're saying, emerging markets, but there it looks like it's on the defensive pretty good right now, right?
It definitely is, but and this is a daily chart. It's coming into a pretty strongly oversold. So if anything, I think we can get a bounce, and I'm just going to toss somebody. Let's just say, that the current low holds. So let me come on, put it on there. I do not want to do it. I wanted to put up a Fibonacci on there.
Mm-hmm.
There, okay. Sometimes it's a little bit difficult. Right here. Thank you. So you can see that here's what we got. Say these all hold, and the market starts to rally. You've got 53.69, 54.54, and like that, and then 55 or 56. But I don't think it's going to get itself back all the way up and start making new highs. The pattern suggests it should get a three-wave rally and an additional decline. So this is going to follow, I think, more in terms of those broader markets needing to also pull back. NASDAQ, pulling back to finish the decline off of the all-time highs.
Yeah, when NASDAQ bottoms, maybe emerging market bottoms. Huh?
Yeah.
Well, let's get into, obviously, we're explaining how you can provide a lot of information, not only on stocks, but on commodities and ETFs and everything else. So
Yes.
Do a little explanation on how people can get a hold of you, and also what you can bring to the table when they do.
Okay. Again, if you want to get a hold of me, the best way to do that is just to send me an email, michael@logicalsignals.com. I answer all my emails. If you're asking a serious question and you're looking for serious information, I will respond. And I'm very faithful on doing that because I believe in it. I can help people on individual stocks, on individual markets, on individual commodities. And really, we could do some in-depth analysis, particularly if you're talking about commodities. We can pull seasonalities. There's a lot of things you can put together and build a solid picture, which would help people to trade. If you're just trying to navigate your way through the S&P because you're trading it, or the NASDAQ or the Dow, same deal. I can provide analysis on those with Elliott Wave and Fibonacci, which, by the way, and I'm using it, well, I use it all the time, but I'm using it very exclusively in the NASDAQ, and it has been extremely accurate, even with these out of the blue gigantic rallies and drops. The wave counts that I'm providing are adhering to what the market is doing, which again shows the power of Elliott.
Exactly. All right. So that's the way you get a hold of Michael and get information from him. As far as optionprofessor.com, we have the weekly market update. And we have been talking about everything from value back in September and the tech back in March and energy back in March of last year. So we have been catching some very large rides, and free of charge. You get a weekly update by going to optionprofessor.com, putting in your email, and then every weekend you'll get something in your inbox on what we're looking at. We also have subscriptions available to go over specifics on what ETFs we're doing for growth, what ETFs we're looking at, and other things for income, and then of course for speculation. So that information will be sent out to you as well. But definitely get online for the weekly update. It is free of charge, and there's a lot of value there. Optionprofessor.com. Okay, I'm turning it back over to David. Thanks a lot, Michael, and we'll have another conversation soon.
Yes.
All right, thanks, guys. Yeah, a lot of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory or app. You can also get the archive of this show as soon as I can get it posted, and the archive of any past shows and events on TimingResearch.com, including, if you missed it last week, we hosted a Women Teach Trading and Investing event all week. We did 35 events and 26 unique presenters, I believe it ended up being. So yeah, lots of good presentations on trading, investing, all different types. So be sure to, you can just go to TimingResearch.com and scroll down a bit and you'll see all those presentations there. Also be sure to join us tomorrow. Dean Jenkins will be back for Analyze Your Trade at 4 p.m. Eastern Time. And you can access that at TimingResearch.com/live. Also, another big event going on this week, our friends at Mad Hedge Fund Trader are hosting a 3-day event that starts tomorrow. And they get a ton of good presenters. So be sure to check that out at madhedge.com. So thanks, everyone.
Thank you.
And thank you to my guests again for today, Michael Filighera, tradershelpingtraders.com, and the Option Professor of optionprofessor.com. Thanks, everyone.
Thanks, David.